Hello traders, welcome. This is Mike Hamilton for Trade the Easy Way, and I'm going to try and keep this as short as I absolutely can. I really want to limit this to just a few minutes if possible. And so, look at the markets ahead. A very monumentous week ahead with the Fed rate decision on Wednesday. It's hard to find anybody who thinks rates are not going to be changed, but we cannot rely on that. Let's just look at what the markets are telling us. And also during the week, on Monday we have Mr. Draghi speaking at 11, very little data during that day. And on Tuesday we have UK inflation, followed by UK Bank of England report, quarterly report, and US inflation on Tuesday. And then Wednesday, of course, we have the Fed rates. We've got UK jobs in the morning, Thursday UK retail sales, and Friday we have an important press conference from Bank of Japan. Possibility they may increase easing or at least introduce some other intervention into the markets. So let's just concentrate on what we see rather than just count on the data and try and predict what we think might going to happen. Let's just look at the markets. Right, on Thursday, I hope you all saw my video where I was talking, well, I was actually short as I was producing the video, because I was looking at this distribution pattern up here. The highs were just selling. Yeah, we're getting open. What was happening on the smaller time frames was we were getting some sharp moves up from the open trading range, but they were just hitting retracement levels and then rolling over. So you could counter trend trade. Nothing wrong with counter trend trading, with as long as you've calculated your risk. But what was working was not the open range trade breakouts, but the actual just the hitting the resistance levels and the ceilings and shorting. And that's what I tried to demonstrate in the video on Thursday. And on Friday, the US opened incredibly much lower than the previous close, so we had a gap and go set up. Any highs were sold into that session. And in fact, all we did on that session was we breached the high of the open trading range, but only momentarily. I mean, literally 5-10 minutes, I think. So the floor of the open trading range was bought. We eventually sort of zipped up out of the trading range. Ignore all this for the moment. I'm just demonstrating what happened on the open trading range. So we sold it into some overnight, some pre-open resistance, and then we just started selling and inching lower into the close. Okay, so just watch out for this. This is where the dynamics of the market have changed. We need to adapt our thinking on this, and so I'm just hoping that you saw the video on Thursday. And so into Friday, if you'd used the open trade range on the DAX open trading range on Friday, was one of the best for some time. We formed the open trading range, we moved gently into the ceiling of the open trading range, and we sold for the rest of the day, including a fade of the open trading range of the DAX. So it was a beautiful setup. So I hope you're just using the open trading range very, very carefully and just monitoring where this market is moving around it, and so making full use of it. So Dow, we ended up with a spinning top 2 weeks back, and which created a downdraft. You can just enlarge that for you. So that's a nice spinning. We had 2 spinning tops over the last couple of weeks, and then last week we got the downforce. Okay, it's a very, very neat distribution pattern up there on the daily chart. It was a major resistance level from the previous week. Very, very feeble attempt to try and break that, which obviously didn't work. And then so the highs into this. So whenever the market took it into that resistance level, they sold it, and then eventually just Friday, capitulation. But for some reason it capitulated mainly in the Euro session, and didn't leave you much in the US session. So I think you can probably predict what I'm going to talk about now. I would just look to short this level here. We have got a lot of support here, which we've got to watch out for. So if we can get an opportunity to short into either 400 or 500, then that is a great opportunity. So, I mean, maybe that we just drift on Monday, don't see much action, and then push up into here, and then get some follow through as we get into Fed Day. Fed Day is going to be very, very volatile. I'm not trading on, I'm certainly not trading the indexes on the Wednesday. I'll have a look at the Forex in the morning. But what I would do is I will open the trading room, and my priority will be to look around the press conference period, not the actual rate decision, because I'm going to stay out. Could see some extreme volatility. Who knows? It could be a damp squib. We just don't know what's going to happen. So it's best to steer clear. Wait until we get the volatility out of the way. I mean, in some cases, it's actually not even worth trading on the day itself, but just waiting until the following day for pullbacks. Okay, but if we look right back here in August, once we breached this level in August, we didn't get, hardly got any pullbacks. You can see here, once we breached this level, they just kept selling it. It sold into the close, open next day, sold into the close. This was a Sunday bar. Monday came along, and we just got a real hellish downdraft. I hope we don't get that. I hope we drift to a large extent to give us a chance to get in at a higher level and then get the downdraft. Before we move off of this, let's just look at what happened in 04 to 06, because we had 17 rate rises between 2004 and 2006. It's worth looking at what happens on that. Let's look at, see if there's any sort of symmetry that we can pick up from that level. Excuse me while I just flick back to this. And this is what happened. We had, this is how 2004 opened. So we had a little push up into January, February, and then we started selling in March. Then we saw a decent pullback into resistance, and we started selling into March, April, May. So this is generally sort of inverse of what you expect. You expect the markets to open. Normally, the cyclical opening in the markets, and a good healthy market would be opening in January, see a little bit of a dip, start to get bought in the middle to latter half of January, push up into February, March, April, May, and see some profit taking in May, pull back in the summer, and then off you go again. So, but in 2004, when we started obviously getting some rate rises, then they sold into any spike, any move high throughout that period. So the highs sold, the highs sold, the highs sold. We get a dip into the autumn, pushes up as the market gets to grips with the rate rises towards the end of 05, and then the pullbacks. You know, once the market settles down, we actually get we get a healthy start in 05 and a push up into 06. So why am I showing you this? I'm showing you this because just because you get rate rises, and these were 17 rate rises here during this period, just because rates rise doesn't mean to say the markets are automatically going to just plummet. There is quantitative easing has long since finished. We've had a few sort of false dawns with potential rate rises throughout this year, and now the market is suggesting that this is definitely on the cards. So the market thinks it's definitely on the cards. We cannot price that in. We could come down here and have a huge bounce. Who knows? We just don't know. And there is a lot of support here, just underneath us at 17,000. So let's just stick with the trend, stick with the charts, and let's just see where we end up. But yeah, in theory, that this market is ready to at least come down here into the back end of the year, and possibly through into the start of next year. Moving on, what does that mean for the, let's kick off with the dollar pairs. So let's look at the euro. Now, what we have a situation where very divergent situation with the Fed potentially going to start to raise rates, and the ECB is potentially going to increase quantitative easing. So we've got the US going up the escalator and the ECB coming down the escalator. So very divergent. What does that mean? Well, that means that if there's fear in the markets, then this was a carry trade. If you've got something that's got, you know, next to zero interest rate in one currency, this is the euro on the left, with in terms of rates, with potential you know, dropping deposit rates and so on, and the Fed increasing rates, you know, we've got this divergence. So what we're seeing is the carry trade means that if you take a very low yielding currency and you lend it in a very high yielding currency, when there is fear in the markets, that carry trade, which was the euro, gets repatriated. So the euro gets repatriated, which is why we have seen a strong euro last week, because there was fear in the markets. So what I'm looking for in this euro is to see if this can come down and test this. So a nice push up here into resistance. I'm looking to see if the euro can just drift a little lower back into this 108.50 level, and then potentially push higher. Okay, but with the weeklies had two higher closes. So that's what I'm seeing in that. On the pound US dollar, a very feeble sort of 90-100 point rise on the week. So with 2 weeks higher closes here, so we could just, if we start to close under 151, start to see a lower close here, we could just roll over. But it's a tough call. 2 weeks higher closes. This is the 50 EMA we just narrowly closed on, or narrowly closed above. Typically you would see the 50 EMA, if this is, you know, a clear downturn, you'll see the 50 EMA failing, as we did here in mid-November, and then we'd see this roll over. So we've got to be very, very careful. Now, one of the things that we're seeing here is a huge selling in commodity markets, particularly oil, and this Aussie dollar is very, very weak on this. You can see we've come up into the fib area of 730, 73, 75, or a little higher, close to 74, and then we're down to 72. And you can see on the weekly chart we are just hanging on there on the weekly chart. So that's 71.5. I'm looking for this to come a lot lower, so we can do one or two things. We could start shorting the Aussie US on a pullback to 72.50. Or another play on this is the Euro Aussie, because if you look at this Euro Aussie, we've had 2 weeks of pushing much higher here, and we've closed above the 50% here. So if the Euro Aussie pulls back to 151.30 or 151, we've got the potential to come up to 155. But in order to trade that, I think we need to get a decent price. So let's just see what Monday gives us to see if that's going to present an opportunity to get along that one. If you look at the pound Aussie dollar as well, that has just closed into resistance. That's closed into a fib resistance. So which is why I'm suggesting the Euro Aussie is the potential better move. On the weekly, all we've done is tested the 50 EMA, which we haven't tested since November last year. So Euro Aussie is one of my favourite trades. Euro CAD, pound CAD and Euro CAD have screamed ahead because oil is so weak. So that's why I'm favouring the Euro Aussie. I did get involved in a nasty whip here. I stupidly got into on the long side of this one before the rates came out. Traditionally I would not do that, but this experience of whip I hadn't seen before on this pair, and so I was looking for this support level here to hold 108.80 area, and that was a mistake. So a foolish trade, I won't do that again. And I'm standing aside of that pair just to see if, bear in mind what I just said about the commodity pairs, this one is to be avoided at the moment. Let's just start looking at the yen pairs now. Bank of Japan have got a press conference on Friday, so this, I'm looking to see if this pound yen can come and hold 18183. On the weekly chart you can see we had a big push up here in the early part of the year, big sell off in the summer, and now we are sideways just playing with this area here. So it's a very untidy chart. On the face of it, it looks as if this could just capitulate and drop lower. You have to, with a lower weekly close. The bears at the moment have got a grip on this, so any move into 184 could see that. If this is going to roll over, then we could see 180. So if you stick with the trend and the charts, then you've got a short at 184. Like I said, it's an untidy chart, but the bias is definitely down. Now, if you look at this, selling, 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 selling. The buyers are a lot smaller bars, very tentative, much smaller bars. The sellers, when they get their hands around this, they really ring it and really yank it down. So you need to be very careful with that one. But the bias is definitely to the downside. Let's look at the euro yen. So the euro yen is much tougher to trade. Again, if the carry trade is off, then this might get repatriated. This might go against the grain. But any instrument that's between the 50 and the 200 EMA is much tougher to call and to be avoided. So I would just steer clear of that. Traders Round Table, we're going to catch up with all of these at 7 PM UK time on Monday. So stick with me for that, because then we'll just see where we are. Right. Just remember that it's just reverting back to the indices for a moment, because I did not incorporate the DAX, and you can see the DAX, the pullback to 10,500 is the sell area. I don't think at this rate we're not going to see it. Let's just get the fibs on all this and take all this support and resistance off. Okay, so the fibs clearly shows that 10,400, if we see it, is a potential for that to crawl back, and that's what happened here on the 20th of August. We had a big sell day on the 20th. We pulled back into the similar area. We pulled back to, actually pulled back to 450, which obviously would be nicer if we saw it. And then we sold right back down to the 93. So a strong euro, repatriation of the carry trade, is crushing the DAX at the moment. And there is the danger that this could all accelerate, because what we're seeing is the bond market. We're seeing a lot of weakness in the bond market. If you get a very weak bond market, it means the liquidity in the stock market and the commodities could be drying up, which is what we're already seeing. That's why we could see an acceleration in the downside to the indices, and a potential repatriation of anything to do with a carry trade, and that could include the yen. So what I'm going to be looking at, and you may want to follow, but do this of your own analysis, is Euro Aussie long, and the potential for the pound yen and other yen pairs to drop further. Like I said with the pound yen, the path of least resistance at the moment is definitely down, but there is some key support underneath it. Alright, so let's just look at oil, and there's oil, which has breached 37.75, so any pullback to that is to be sold into, and we according to this fibs, we could be coming down to 31.15. And obviously 30 will be the big number, so very, very weak. This is another reason why we're seeing so much weakness in the stock markets, because the oil stocks are crumbling under the pressure of such a weak oil. So there is some fear and a degree of panic in the markets at the moment. So be patient, and let's just hope we get some nice pullbacks. Okay, let's just look at some stocks now then. And you can see we've got examples of Tesco's. Look, that looks as if that's just about to come into 140 now in Tesco's. We've seen, what's this? Marks and Spencer come off hard. We're seeing even Barclays just not doing it. Let's have a look at Rolls-Royce. Keep an eye on Rolls-Royce. 55 is a key area, but this 55.25 is potentially even better. It's short. Yeah, let's not pick a bottom. I do not want to pick a bottom, and I certainly wouldn't advise you pick a bottom. At the moment, any pullback to 568 is a potential sell to come back and revisit 5. Let's see if we can spot anything else that's... I'm looking at... let's look at some insurance companies, obviously because the UK oil... UK floods have caused a lot of problems. Let's look at... let's look at someone like eShore. I can just quickly find it, and then just do a search for eShore. You might want to consider a short on this one. And the short signal would be coming to 245. I wish it would close at 245 roughly. We're under the trend line. We're struggling. It's a messy chart. I would suggest you might want to look at some of the other insurers, but look at that on Monday. And a couple of other sectors I'm very, very interested in as well, which we'll look at that on Monday. All right, I'll leave it there. It is a little bit longer than I expected, but it is an important week, so bear with me. And look forward to seeing you in the trading room tomorrow. All right, thanks very much, and bye for now.